some stock-specific action. So Zee Entertainment is under pressure post its Q3 earnings. Ad revenue growth, that is the key metric the street tracks, and that's down 16% on a year-on-year basis, though on a quarter-on-quarter basis, it is showing an improvement and a pickup of 5%. Vahishta is here with the fine print. Vahishta.
Hi, Rima. You're absolutely right. It's been yet another weak quarter for Zee. In fact, the revenues have been flat, which was led by elevated investment in content and marketing costs. The EBITDA margins have contracted as much as 600 basis points on a year-on-year basis. Additionally, the provisions, which are totaling to 169 crores, were made in this quarter, which led to a drag in their profitability. As you mentioned, advertising revenues were down 16% year-on-year basis, which was led by the free channels, withdrawal of Zee Anmol, and curtailed ad spends by the largest sector, which is the FMCG sector. Though the positive was in the subscription revenues, which grew by about 13% on a year-on-year basis. ZEE5 revenues have also grown 33%, but their EBITDA losses have widened further to 282 crores. Zee's All India network share has also contracted and is now at 16.2%, which is one of the lowest in many quarters. So yet another weak quarter, but the silver lining, of course, is on the merger with Sony. And the street is going to be closely watching that because the NCLT hearing is also today. In terms of brokerages, I would say Citi has said that FY 24-25 earnings estimate has been reduced and is lower at 11 to 15%, and the target price has been cut to 280 rupees. CLSA has a target price of 325 rupees, while Elara Capital is quite optimistic and says that the target price is 390, factoring in the merger synergies. Back to you.
Thank you very much for that. The Zee-Sony NCLT merger decision is going to take place today, as Vahishta said, and that's very important. And one of the exceptional items that the company took was related to merger-related costs of nearly 69 crores, and that was one of the exceptional charges. Let's talk about Nykaa. That slumped in trade after margins come under pressure in the third quarter. Mangalam is here to tell us what the brokerages are saying. Mangalam.
Well, as far as Nykaa is concerned, the revenue growth of the company was pretty much in line with what the street was anticipating. However, it was the composition of the revenue growth and its resultant impact on the margins that has the street and the brokerages worried. If you just take a look at what Goldman Sachs has said, they've said that they've been positively surprised by the acceleration in their fashion business, which grew at around 50-odd%. But the BPC segment, beauty and personal care, which is the core of the business, grew just 26%, and that was a negative surprise. However, they have a neutral rating on the stock with a target of 200 rupees per share. Another company which has 200 rupees per share as the target on Nykaa is Jeffries, which has a buy rating, and they say that the gross merchandise value growth was led by fashion and others on a low base. Other segment actually grew over 250-odd%, and the BPC, or beauty and personal care, grew 25%, largely due to a high base and shift in the festive season. At the same time, was impacted a little by the weak demand. Overall, the gross margins of the company were below expectations because of inferior mix, the discounting that the company had done, and because of weak demand environment, some down trading that took place by customers as well. As the company continues its investments in e-B2B offline expansion and own labels, this is something that they will watch out for. And finally, we have Nuvama, the erstwhile Edelweiss, has cut the target price from 251 to 195 because of lower EBITDA expectations. So they've lowered their EBITDA expectations by about 8% for this year. But importantly, in their model, they've upped the cost of capital assumption as well, as a result of which the discounting factor has increased, and that has led to a lower target price for them.
Okay, thank you very much for that. Some stocks which are moving around. So Adani Ports has recovered 4% from the day's low, is now back in the green, a gain of 1.5%. City Union Bank was down 15% yesterday as slippages rose very sharply sequentially. But we had a chat with the management and they indicated that this was an account of the NPA divergence, the increase in slippages, and the slippage ratio will moderate in Q4 and go back to historical levels. So the street is now taking note of that guidance on slippages going forward. They were also confident about maintaining NIMs at the current level. So that's another stock that we are watching very closely. And Balkrishna Industries, on the flip side, continues to see selling pressure, down 2.5%. RHI Magnesita is under severe pressure, down over 6.5% after reporting its Q3 numbers. Nigel is here with the fine print. Nigel.
Well, there were two problems with the numbers. One was in terms of the results that they reported. On the top line, there was, good growth of close to 20%. The problem is there was a degrowth of close to around 13%. So clearly, raw material costs are hurting them. And that's why margins came down to around 14% on a year-on-year basis. A weaker operational performance led to the profit number as well, coming sub 60 crores. Now, if you look at the margin performance, well, it's the lowest margins that we've seen all the way since the September 2020 2020 quarter, when they delivered margins of close to around 14%. So the trajectory should come up for you. From around 20%, it's come down to around 14%. The second problem is that the fundraising plans. They've announced that they're looking at raising equity probably to the tune of close to around 1,500 crores. That was approved, and that's a bit of a worry because that would mean a dilution of more than 10%. Remember, they have been doing some inorganic acquisitions, but the street was okay with them raising some debt. Why dilute to such a large extent? So that seems to be a bit of an overhang and explains why the stock is under pressure.
Thank you very much for that. Get into a break. We'll come back and discuss commodities. Manisha Gupta joins in next.